What's up? I'm Dan Fredenberg, and this is another chance encounter. Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building. I'm joined today with Eric. Is it Lizama? Is that how you pronounce it?
Yes, sir. That's correct.
Excellent. And how are you doing today, Eric?
Oh, I'm great, man. Enjoying the lovely weather here in Texas.
Yeah. It's a lot warmer than here, but I gotta tell you, Eric, I'm really excited today because I've got my very favorite audience member joining me today. And why is my favorite audience member here today? It's because this is a chance encounter where I interview syndicators of commercial real estate and buyers, sellers, investors, all that kind of stuff. And why do I do that? Well, one of the big reasons is because of the law. I know that most deals are private, and the only way that you can share those private deals, those off-market deals, is if you have a prior substantive relationship that's documented, and that's a big chunk of what we're doing. But the exciting part for you is I also show you how to effectively communicate on the subject of commercial real estate and how my guest fits into a deal. Very exciting stuff. But before we get too excited with all of the different details, do you want to say a few things about yourself, Eric?
Yeah, Dan, thanks for having me. I really do appreciate it. I know your time is valuable. So I am active duty military, stationed here in Texas. I retire next year. And I'm also the owner and principal of Arrowinds Capital, a real estate investing company, where I'll be transitioning in 2023 full-time into apartment syndications.
All right, great. And I don't want to freak you out, but I want to say before the next section here is about the distinct motivations. But I gotta say, but wait, check your eight, and not like that way. Eight. I mean, like if you look at your camera like a clock. At your 8 o'clock, as the audience is five, if you can see through your camera, you might be able to see if they have the red subscribe button or if it's the gray one, which is the good one. And it's really important. Okay, that's just a joke. I always do it. And then, but anyway, the five distinct motivations. I found that commercial real estate syndicators, they're it's a lot of effort to make a new acquisition. It takes time, lots of ways you can go wrong. So there's got to be some reason why you're going to go through all of these. And I found five distinct ones. The first one is to preserve purchasing power. Now, what that means is if somebody already has a portfolio of assets and the way they make ends meet is because of the proceeds from ownership, then the only reason they're going to be making a new acquisition is when either inflation is eating away at their purchasing power, because you don't want to be selling assets. But the other thing is if there's an asset crash, they might be scooping them up because they're heavily discounted. Now, that's not what I'm up to. What I'm up to is trading time directly for wealth. I got a background in tech, specifically it's CRMs with the ability to accept credit cards. And so that makes me a high wage high salary earner, all that kind of stuff, at least until I opened my agency in 2011 on that. But what's really going through my head is if I'm getting more tax than anybody else, if I'm just relying on salary or wages, it makes more sense for me to pivot and find a way to be rewarded in the form of deployed capital, aka equity. So that's what I'm up to. But many people, they come to commercial real estate because they're looking to take over and take control of their schedule. And for some people, that means they're fast tracking their retirement. But other people, it just means they want to work fewer weeks per month or maybe fewer months per year or something like that. But that's not everybody in this business. Some people are just plain ambitious. They want to buy their entire hometown. They want to get that generational wealth and make sure that their great grandchildren never have to hold a day job. And that's why these guys are great to have on your team. They're going to be hustling into their 90s. But this last group, they're also going to be hustling until they drop. But that's for a little bit of a different reason, which is they've found a sector of society, or maybe it's animals, maybe it's the environment, who knows what it is. But they realize you need a substantial financial backing if you're going to make a really big impact. And that's why they're making these acquisitions. So, of those five different motivations, Eric, what combination of them would you say describes you best?
Oh, I don't know. I think all five. You hit it. You hit the nail on the head. All five, right? It's not just one thing for me. It's the whole gamut. I'm looking at the whole pie, and I want every single slice of
Awesome, awesome. That's good stuff.
it.
All right, then. So my next question, though, has to do with tolerance for risk. And the inspiration for this question is because when you're dealing in private securities like 506B deals, then
Mhm.
one of the questions they have is, well, how much risk do you like? But I don't think that's specific enough. Some people come to this business because they're like, oh, yeah, commercial real estate, lots of money in it. But yeah, there's tons of risks in it as well. It's competitive. So please fill in this blank, Eric. There are many popular investment asset classes, but I think blank is too risky. What's too risky for you, Eric?
Although it's too risky, I do have a few dollars into it. It's
Mm-hmm.
cryptocurrency. Yeah,
Mm-hmm. Mm-hmm.
that's too risky to go all in.
Yeah, I'm there with you. Any particular reasons? Any reasons why you can explain why
Well,
crypto?
it's just not completely regulated yet. It's not mainstream enough where it can hold its own weight. It's
Mm-hmm.
still in the I don't want to say R&D mode or research and development mode, but it's like the credit cards in the 1950s, right? Like only a few people had it, but if you did have it back in the day, you're good to go now. So maybe 20, 30 years from now, crypto will be the thing. But as of today, 2023, it's still too risky.
Mm-hmm, mm-hmm. I love it. I love it. So let's get into commercial real estate and explain why we're doing it and what we're doing. And the way I'm going to do that is with the Dan Does Deals commercial roll die. And apparently I turned off the filter that makes all the magic. So if I go for this one right here, da, 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 now it's magical.
There you
We
go.
like magic die. Anyway, so the story with the dandoesdeals.com commercial competency cube, you can say that a few times. You can go to dandoesdeals.com and download and print out your own copy of it for free. I don't even ask for your email address. It's a terrible idea. If you're in marketing, you should always ask for contact information. But the thing that's more important for me is I want to make sure, as I said, you can effectively communicate on the subject of commercial real estate and you understand how my guest fits into these deals. So please do go to the site, print one out, and practice explaining all this stuff to friends, family, whoever you got. So first, we're going to talk about repositioners. Repositioners look at a bunch of different properties. They're acquisitions people. They do a bunch of paperwork. And what are they doing with all this paperwork? Well, there's a fancy word for it. The first thing is underwrite the deal. Okay. And that means do the math. You have to figure out, first of all, is this broker or seller actually even telling the truth about how much this property is making? And then a lot of people will just call repositioners investors, but what I call them repositioners because that's what they're thinking about. They're thinking about how can I change this property so that it makes more money? And there's one change that they can do which has nothing to do with the property, which is going to financiers and getting more advantageous lending. So if your business has smaller amounts of debt service, either in other words, smaller loans or less expensive loans, then that extra money goes straight to the net operating income, which means it's worth more right there. That finds the upside. But if the repositioner doesn't have more advantageous lending at their disposal, first place they're going to look is operations. They're going to make sure that these Benjamins stop going down those toilets. But there's more to operations than just unclogging toilets, especially once you get into bigger deals. You're going to be using third party operators if you're on the ownership team, but you still have to do some asset management and you have to have some real reason to be there. Me personally, my operations contributions has to do with automation and then also with marketing to keep the vacancy rate low when when that's what's going on. But commercial real estate is super duper competitive, so that's often not enough to upside for the repositioner. So they get a contractor team to do a value add. They fix the units up so that the new tenants will be happy to pay more in rent than the previous ones. But having a bunch of work done on your building, it's a little bit expensive and a little bit risky. So if you're like me, see, I'm from the internet, you're going to need a local. You're going to need somebody who is local accountability. They can be there in an hour or two. And that's not going to be me because I'd be stuck at an airport in an hour or two. But the local has to make sure the contractors are doing what they say they're going to do. They're keeping to budget, they're keeping the schedule, all that kind of stuff. And the same for the operations team. But when the repositioner has the deal, has the team, turns around to the lenders and says, hey, I got this property. It's worth tens of millions of dollars. If I can buy it, so can you lend me tens of millions of dollars by any chance? Well, the financier is going to have one question that I haven't answered yet, which is, who's your sponsor KP? Who is the sponsor KP? And this is the side of the die that a lot of coaches, they kind of gloss over this piece. But what it's all about is, if you want to be eligible for a commercial loan, let's say it's like a 350 unit apartment complex worth tens of millions of dollars, and you go to the bank, they're going to want somebody in the fold who already owns a similar asset. Okay, or you're just plain not eligible because they're trusting a lot of their clients' money to you to take over. So you need that person who already owns a similar asset. You also need a balance sheet of at least the amount of the loan, and you need a certain amount of liquidity. And if you have all those pieces, you got yourself a commercial deal. So Eric, as far as your core competencies, what are you looking to contribute in your next deal?
So for my company, Arrowlands Capital, really we do the repositioning ourselves. We underwrite multiple properties every month to see what is a good deal and is it a good deal for us and for our investors. Um, what we don't do as financier, we do look for outside sourcing. We look for capital for the limited partners, banks, lenders. Um, Me specifically, being in the military for over 20 years, I'm very operations heavy. So my superpower, if you will, is asset management. I love taking teams. I love leading teams, and I love managing systems and processes. I move every few years because of the military, and I'm always in a new unit, a new assignment, a new mission. So I like to look at how things are operating. I like to take the systems. I like to take the processes that are in place, and I like to fine tune them. And that transitions very well for me in asset management. That also falls into the contracting piece where our company provides value add opportunities. We would look to acquire Class B or Class C properties and upgrade them, whether it's to provide better property management through third party contractors or companies, and then do the fixed um, updates, whether it's landscaping, whether it's interior decorating or anything like that. And then you also talked about the local piece. Our company invests in the Texas Triangle, so that's between Dallas, San Antonio, and Houston. I'm personally, and I live in Temple, Texas, which is in the center of that triangle. So it's only a couple hour drive for me to get to the properties really, really quick and really easily. I don't have to ride a plane, fly a plane, take a train. I just drive out and I'm in and out. Um, One good thing you noticed about or brought up was a sponsor KP. Right now, I'm co-GPing or I'm trying to co-GP with a lot of companies out there, a lot of real estate investors, so that I could get into the bigger deals. So that's definitely one that, like you just said, people don't talk about. That's like the elephant in the room when it comes to trying to get finances.
Yep, that's exactly it. And like I think part of why it's so important to me is because coming from building the tech for all these courses, like it's tens of millions of dollars in coaching that have
Yes,
gone through my systems for other coaches. And so it just makes me go, it's like I don't like it when people pretend that there's a clear path to a particular goal when there's this huge obstacle where it's kind of like a gotcha moment when you find out, quite frankly. And that's why I'm trying to start
absolutely.
people off right from the get-go, saying it's like you're stuck to a sponsor and you're going to need to meet a few, no matter what way you look at it. But that's
Right.
fantastic. So as far as buy box goes, I know you went into some detail about that already, but I want to make sure that for all the virtual assistants that are in the audience, that they get this down. And if you're not a virtual assistant, this is what a buy box or ideal property is. When commercial syndicators, investors are talking about their ideal property, they're talking about three main things. First one's geography. Where is it? So which states, which counties, possibly even which neighborhood, it's all going to matter. So geography's first. Second thing is the size of the deal. You're going to have different teams taking care of 15 unit apartment complexes from 500 unit apartment complexes. And of course, some commercial real estate is like industrial where they go off of square footage, but that size definitely matters. Now, the third thing that they're going to be asking about is class, and class is separated into two types. That's something I hate, is one word meaning two different things. But anyway, first meaning of class has to do with the condition of the building. So is it old? Is it beat up? Is it up to date? Is it no luxuries at all, like a prison, or is it luxurious, like a palace? That's the first meaning of class. Now, the other meaning of class is also sometimes called area, and that has to do with the crime rate in the school districts where the property is located. But both of those meanings of class are rated the same way as in grade school. So it's like A plus, A minus, B plus, and so on. So Eric, for you guys, what's easier to say yes to? What's more difficult to say no to?
So our buy box essentially, again, is Central Texas. It's in between Dallas, Houston, and San Antonio. Whether that's a primary market, secondary, or tertiary markets, we focus on apartment complexes or multifamily units. The deal size is anywhere between 5 to 30 million, and then the units. So per unit, we're looking at 75 units or more. And what that does, it brings us to be able to bring in a third party commercial property management team versus usually using mom and pop systems and processes. The years, the vintage is 1975 and older. We don't want to get too old to get in too deep into the construction and rebuilding. Um,
So you
and we're
mean
looking
newer
at,
then, right? You
yeah,
said
yeah,
newer than, yeah,
exactly,
yeah. You said older than
1975 and
75.
newer.
Yeah,
Absolutely,
yeah,
1975 to like the 2000s.
right.
And that brings me to my classes of apartments. It's going to be Class B or Class C apartment buildings, and preferably in Class B neighborhoods. But we also will invest in Class C neighborhoods again, because yes, we're doing it for the company to build to build our brand, our company, get money for our investors, but also provide value in homes for people who need it.
I love it. I love it. And the next question has to do with how to reach out to you. You and I met through some Zoom meetups that I usually find through LinkedIn. LinkedIn's a great way to get a hold of me. My name is very distinct. This code, this QR code, if you scan this with your phone, it'll bring you to the FAQs page of 506 Me, which is the syndication compliance platform that I have to streamline your investor list growth. And that means that I can be your chief compliance officer for as little as $497 a year, depending on your needs. But Eric, if people want to get a hold of you, is there a social media platform that's best, or is it a website, phone, email? How should people reach out?
Yeah, so the best way to reach out to me is either through my website. It's going to be www.arrowwindscapital.com, arrow, AERO, windscapital.com. You can you can subscribe there, get on my newsletter. You can also reach me on LinkedIn. There's not a lot of Eric Lizamas out there, but I'm sure both of those names and websites will be in the description below.
That's absolutely right. And that brings me to the last thing, which is actually not for you, Eric. It's for you in the audience, which is it's a PSA. If you have been watching this episode and you're like, wow, I don't know what's happening in my eyes. It feels like there's like lightning and fire and it's like burning and like migraine like symptoms. It's probably the downright hideous red subscribe button that's down here. All you have to do to get rid of this button is you just click on it and it turns gray. It's so much, it's so much. You should try it, because really what it means is that my videos will show up on your list of suggestions. Sure, you can ignore those. Really what I'm up to is if enough people hit the button, then YouTube will pay for these videos instead of me. That's what I'm really up to. But no matter what, I really appreciate you spending this time with us. And just like Eric, I appreciate you spending the time with me. It's been great getting to know you a little bit better.
You too, Dan. I really do appreciate your time again. It was
Awesome.
fun.
Awesome. Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay. Are you already logged into 506BME?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506 BME, everybody.